Hi, and welcome to this week's look at the major news stories that are affecting the markets so far. And what are we going to be looking at this week? Well, we're going to start pretty much as we did last week with the FTSE, and again, not having the best of times. Then we're going to have a little look at the dollar, see how that's been faring so far in 2024. We then have a look at oil and plenty of talk off the back of the latest monthly oil market review. And we'll finish up with what was quite a big story really about Microsoft overtaking Apple as the biggest company in the world. Let's start with the FTSE, and the price plummeted after the recent inflation data. In fact, on Wednesday, we saw the price fall by 1.5%. On top of that, the RSI indicator on the 4-hour chart fell below 18 for the first time since July 2023. So that poor start to the year we spoke about last week seems to be continuing. So what did the inflation data come out as? Well, CPI came in at 4.0%, a flat 4%. We were expecting that down to 3.8% after the previous month's figure of 3.9%. Fair to say it was a little bit of surprise, a lot of it being blamed on tobacco and alcohol price inflation, but not the news we wanted to see. Now, obviously it's led to concerns about changes in interest rates, and in fact, will the falls in interest rates we've been hoping for still happen? And then obviously a knock-on concern about economic growth in the UK. Not a surprise, but those sectors that are most sensitive to interest rate changes, such as real estate and finance, saw the biggest declines on Wednesday. There were also significant falls in retail and consumer goods companies. Again, that's due to those growth concerns and the amount of money people will have in their pockets if there aren't decreases to the interest rate. Let's take a look at the chart, see what that shows as well. The price has fallen to the lower boundary of that channel, which we're showing in blue. It's fair to say we can probably assume that there is some market weakness as the price has been unable to stay above that September high in December 2023, and the price action around the 76.65 level, which has switched roles from support to resistance. These are quite key technical analysis levels to keep your eye on. I think it's fair to say that if we get more negative news, the support from that lower boundary of the channel may well be breached. That could lead to the price falling down to around the 7,300 mark, which served as support throughout 2023. As we've already said, it's not looking great so far, 2024 for the FTSE 100, the UK100 as we quote it. So keep your eyes and ears open for all the market news that may well affect it moving forwards. Okay, we'll move on now. I'm going to take a look at the US dollar, and it's continued to strengthen since the beginning of this year. You know, the complete opposite of the FTSE, really. Well, Wednesday saw the dollar index hovering at about a 1-month high. This was mainly due to there were comments from Fed Chairman Christopher Waller, which dampened expectations of a March rate cut in the US. And to paraphrase slightly, he said that the Fed would not rush to cut rates until it's absolutely clear that lower inflation rates are sustainable. Now, obviously, there's a little bit of conflicting information coming out about inflation rates across the world at the moment. Also worth noting that the market expectation for a cut in rates in March went down to 62.2% from 76.9%, according to the CME's Fed Watch tool. So that's quite a large fall in expectations of that rate cut. Now, the Euro-US dollar chart on Wednesday showed us that the rate dropped below the psychological level of 1.09, which could well become a resistance level now. The decline in the euro dollar from the peak at the end of December 23 is greater than 2.3%. Question really is, will that trend continue? Well, if you look at it from a technical analysis point of view, it suggests the strengthening of the dollar may slow down as the price nears that important support level. The lower boundary of the ascending channel that's been in effect since the end of last year. Now, that channel's plotted on the graph along the turning points, which are indicated by the arrows. Now, it may well be possible to see a rebound from that lower border, and if so, the nature of that rebound may well indicate if the bulls can keep the price within the channel we've got marked on that chart. Obviously, lots of data abounds again, so it could well be quite a volatile time over the next week or so for the US dollar. So don't forget your risk management techniques. Okay, now we're going to turn our attention towards the commodity markets and have a look at a bit of a big story about oil. Now, we've been looking at oil obviously over the past few months, what with OPEC Plus cutting supply and obviously geopolitical concerns around the globe. And Wednesday saw the publication of the monthly oil market review. And in that, it said that OPEC expects demand to increase by 2.25 million barrels per day in 2024. That would be an increase of approximately 2.2% over 2023 levels. They also expect an increase of 1.85 million barrels per day in 2025. And they're putting that sort of growth in consumption to be driven by China, the Middle East and India, as we sort of heard before. Now, these statements align with Occidental Petroleum's perspective of a global oil shortage starting in 2025. And they're saying this because they're saying the pace of demand growth is roughly 4 times the volumes of new reserves. And as we know, demand outstrips supply, prices go up. However, that directly contrasts with Citi analysts' view, and they expect Brent crude price in 2025 to be around $60 per barrel due to oversupply. So clearly some quite polar opposite thoughts in the market. Well, we're currently fluctuating around the $77 per barrel consolidation zone at the moment, but obviously ongoing geographical tensions and possible supply issues, the Red Sea for example, are being very, very closely monitored by traders and should be by you as well. Now the chart shows us that the new consolidation zone is lower than the previous zone, which is around the $81 mark, and now we're looking at about $77. The price is near a crucial level of $73 per barrel, which we saw as support in 2023, and that sort of price level led OPEC Plus countries to cut production further. Could well happen again in 2024 if they don't see the sort of increase in prices they're hoping for. Now, the rapid recovery that we can see from the December lows could well indicate strength of demand for Brent crude below $74 per barrel. Again, another area to keep your eye on. So if we drop below $74 per barrel, it could be that we see a subsequent increase in the price. But as I say, when you've got analysts in different firms basically coming out with polar opposite expectations for the price moving forwards, shows you just how difficult things are to predict prices moving forwards. Okay, and we're going to finish up this week on an equities, a stock and share story from earlier this week. And that was Microsoft became the most expensive company in the world, surpassing Apple. Now, Monday saw Microsoft go past Apple's market cap valuation. In fact, at close of play, we were looking at Microsoft being valued at $2.887 trillion US dollars versus Apple's $2.875 trillion. Big numbers, but clearly a little difference there. Why did this happen? Well, there were positive expectations abound in the market, mainly around Microsoft's position in the AI field and being a leader there. So a lot of expectation coming back onto AI. Also saw negative sentiment around Apple. There's a lot of talk about iPhone demand having fallen compared to previous model. We're also seeing, watch sale bans in certain states in the US, interest waning in China. And on top of that, there's a possible Justice Department large-scale antitrust case to be filed against Apple. And that sort of refers to their market domination and their protectionism around the components that they use. Now, MarketWatch provided a fact set on analysts' expectations for the two companies and their forecasts. So Apple, they're saying up 6% in the next 12 months, whereas Microsoft up 9%. In terms of the signals, Microsoft, 90% are saying buy, 10% brokers at neutral, and sell at 0%. Apple, on the other hand, buy recommendation from 57%, neutral recommendation from 34% of analysts, and a sell recommendation of 9%. So you can see quite a bit of difference there. January the 31st is going to be quite important, but that's when we get Microsoft's Q4 data. So we may see a little settling of the price up until then, or we may see further price action. Quick look at the Microsoft chart, and what does that show us? Well, the price is in the upward trend, shown here in blue. Now, the figure of consolidation A to B was broken by the bulls. Will they be able to maintain that? At the same time, though, it's worth looking that the acceleration of growth could make the stock overbought. The RSI is near to 70. That sort of level and above, we start talking about an equity being overbought. Clearly, a very, very strong start for Microsoft this year. We've talked about tech stocks being market leaders for quite some time now. It doesn't look like that's going to abate. Anyway, we wish you luck with your trading the week ahead, and we'll see you soon. Bye for now.